Hi Mindsetters, and welcome to yet another Learn Extra live show. It is accounting and we are going over debtors and creditors and reconciliation. I've got Mahesh with me. How are you?
I'm well, Indy. Well done on that. Yes, it is debtors and creditors
I was
reconciliations.
doing a sneaky little look at the board. I was cheating slightly.
Okay, this has just come off. Okay.
It's okay. It's okay. I'll send you to the board when you need to go, and then I'll
Okay.
chat to the Mindsetters.
Brilliant.
What are we going over in today's show?
Okay, today, guys, we're going to be looking at reconciliations. Now, if you remember last week, Ashraf did bank recons. I'm going to be looking at debtors and creditors recons.
Oh, fantastic, fantastic. And actually, you take a little spot by
Okay,
your
brilliant.
board, and I'll give them the little rollout. This is what is happening, guys. So Macmillan has sponsored the show. Thank you guys so much. Proudly sponsored, and all of the content that Mahesh is going over is on the screen. Okay. So what we're going to do, guys, is we're going to get straight to the show. Don't forget that you need to follow this link. It's very, very important. This is the link that you need to know. It is www.learnextra.co.za/live. And what you're going to get from there, guys, is that you're going to get all of your schedules. You're going to be able to download the notes, and you're going to be able to have a look at any of the videos or anything like last week's accounting lesson is on there. So that is the note, and that is the link that you need to know. So I'm not going to waste any more time. Mahesh, take it away.
Okay, thanks, Indy. Hi, guys. Yes, today we're going to be focusing on debtors and creditors reconciliations. So let's just begin. Right, in this lesson, people, we're going to be looking at, let's just get a pen out quickly. Okay, we're going to be looking at the journals. Okay, guys. Right, we're going to be looking at journals used to record credit transactions. Then we're going to focus on how to prepare a creditor's reconciliation statement, as well as touching on a debtor's reconciliation statement, the purpose of credit control, and then the purpose of monthly statements that needs to be sent out to debtors. And then also, guys, we're going to look at a debtor's age analysis. Right, let's begin with journals. Okay, firstly, guys, when we look at creditors, now remember from your grade 9 and your grade 10 accounting, creditors, obviously those who the business buys on credit from. In other words, the business owes money to your creditors. Now let's quickly look at some of the credit transactions. And Indy, I'm just going to turn over here. I think this is a bit more comfortable for me.
That's better.
Okay,
Whatever's
this
easiest for you.
This is much better. Okay, guys, let's now focus on these credit transactions. When an enterprise buys goods on credit from another enterprise or suppliers, the transaction is recorded in your creditor's journal. Okay, you remember that from your grade 9, your grade 10 accounting. I'm sure you do. Let's read on. Any purchases returned, purchases, guys, that were returned. In other words, you maybe bought the incorrect item, or you're not happy with the item that you've purchased, the quality is not quite up to scratch. Any items that are returned are recorded in your creditor's allowance journal. Again, guys, you did this in grade 10 accounting. Payments of outstanding creditors' accounts are recorded by making an entry in the cash payments journal. Okay, we're obviously familiar with that, people. Let's read on. Errors, which sometimes happens, errors that are corrected, or if there's interest that is charged. Now remember, sometimes you may not pay your account on time. So your creditor is obviously going to charge you interest because of that. So interest that is charged on any overdue accounts and transfers between debtors and creditors' accounts are all recorded through entries in your general journal. Right, guys, I know it's a lot to read, so let's quickly summarize this by looking at the actual journals itself. Okay, there we go. Right, so the following journals are used. A short summary, Your CJ is obviously for your credit purchases. Your CAJ, Creditors Allowance Journal, for recording purchases that were returned. CPJ, in terms of your creditors, this is for making any check payments to your creditors. And then sometimes we come across your PCJ, your Petty Cash Journal. This is also if you make any payments to your creditors. CRJ, if, for example, you've given a check to your creditors, guys, and let's assume you forgot to sign the check, that check is going to be recorded as an RD check. And then finally, General Journal for sundry transactions relating to creditors, for example, your interest on overdue accounts. Right, guys, let's do a quick recap now on the actual creditors control account. And I'm talking about your ledger account. Okay, so let's get started. Your creditors control account, type of account, people, it is a liability. Liabilities decrease on the debit side, and they obviously increase on the credit side. Now remember, guys, every time you purchase on credit, in other words, going back to what we've just recapped on, so each time you purchase on credit, it's going to be recorded in the CJ. So your CJ is going to make the amount that you owe your creditors increase. Okay, with me. Every time you make payments to your creditors, so you've issued a check, you are paying your creditors, it's going to be recorded in the CPJ, Cash Payments Journal, and whatever you are owing your creditors, guys, is going to decrease. So CPJ entries will decrease the balance that you are owing your creditors. What happens when you are unhappy with an item? You're obviously going to return it. It's going to be recorded in the CAJ, Creditors Allowance Journal. And again, if you are returning an item, you don't have to pay for that item. So again, your balance, guys, is going to decrease. So CAJ, on the debit side of this account, your balance is going down. It's decreasing. Right, now when it comes to general journal entries, guys, remember you've got to take each entry as it comes. So for example, your creditor decides to charge you, the business, interest. In that event, what's going to happen to your balance? If they're going to charge you interest, that balance is going to go up. Absolutely correct. So general journal could increase the balance that you are owing to your creditors. Right, guys, are you with me? I'm sure you're with me. Indy, how's things going?
No questions on the page. You know what that means? Either they're understanding or they're too shy. Guys, make sure you post those questions, because the only silly question is the one asked after the exam.
Exactly.
Then it's too late.
Okay, and just remember, guys, I know this is obviously a recap of your grade 10 accounting, some of it even a recap of your grade 9 accounting, but it's important that you remember what you learned in grade 9, what you learned in grade 10, when we are applying it to recons, to your creditors recon. Right, let's move on. So apart from your control account, your creditors control account, the business will also keep an individual account for each creditor in the enterprise's creditors ledger. Okay, and I'm sure you all remember your creditors ledger. Your creditors ledger looks more or less like a statement. It doesn't look like a T account. And the creditors ledger, each creditor, so for example, you might have Stephanie suppliers, import traders who you buy on credit from. So they will have their individual accounts in this creditors ledger. This individual account is a summary of all the transactions between the enterprise, which is us, the business, and the creditor, and shows the total amount due to or outstanding balance of the creditor itself. Okay, guys, we're going to look at a creditor's ledger in a moment, but I'm sure most of you remember or you know exactly what I'm talking about. So your creditor's ledger shows you your individual transactions with each creditor, how much you bought from, for example, Stephanie suppliers, how much you paid Stephanie suppliers, how much you now owing Stephanie suppliers. Let's move on. The entries in the journals as books of first entry are then posted on a daily basis or monthly to the individual account of the creditor. Exactly what I just explained, guys. Right, so we've obviously got a control account, and then we've got our creditors ledger as well. Let's move on. Okay, let's just extend this page there. At month end, an account is rendered by the creditor. Now, what do we mean by this? Your creditor also keeps a record of all the transactions between the actual enterprise and the creditor itself. So your creditor will send you what we call a monthly statement. Okay, so he's gonna, or she's going to send you a statement. In this statement, let's move on, it gives a summary of the transactions concluded with the creditor during the month and the total amount that the enterprise owes the creditor. Okay, guys, so we've obviously got our creditors ledger, okay, and then at the end of the month, we then get a statement from the creditor. Okay, and these two should be the same, or we hope that it should be the same. Right, let's now move on. So what exactly do you think is a creditor's reconciliation statement? And I'm sure most of you know this by now. Absolutely correct, guys. It is a comparison between our records, in other words, what we've got in our creditor's ledger to what the creditor has in his or her records. So let's just read through this definition of what a creditor's reconciliation statement is. When the enterprise receives an account statement from the creditor, so he receives the statement, when the business rather receives the statement from the creditor, the statement must be then compared. There's that word comparison. Remember, guys, a recon from Ashraf's lesson last week? It's a comparison. You are comparing an external document to an internal document. External document, what is coming from your creditors, comparing that to what you have, the internal creditors ledger that you've prepared. So it is compared with the entries of the creditor concerned in the creditor's ledger. The purpose of this is obviously, guys, to check or to trace any errors and or omissions. Okay, errors, a mistake that has been made. Omission, something has been left out. For this purpose, a creditor's reconciliation statement is then prepared. Okay, guys, you with me? Okay, Indy, how are we doing? Are we doing fine?
We're doing fantastic. We're doing fantastic.
Right, guys, let's just quickly look at the example. So we've got, firstly, Stacy Traders is sending account rendered a statement to Exemplar Stores. So we've got a statement. Okay, and then below, guys, let's just extend the page there a bit. Below, we've got a creditor's ledger of Exemplar Stores and the creditor being Stacy Traders. Okay, so let's now compare. So according to Stacy Traders, Exemplar Stores is owing, okay guys, I hope you can see that. Let's just quickly erase it. Okay, let's get the pen out. So according to the statement, Tracy Traders is owing Exemplar Stores $44,560. And if we look at the creditor's ledger that's obviously prepared by Exemplar Stores, they are owing Tracy Traders $44,560. In other words, after doing this comparison, we obviously see that the amounts are exactly the same. In other words, a recon is not necessary because the amounts are the same. Let's go one step further. Let's now check our credit entries or exemplars credit entries against Stacy Trader's debit entry. Now, guys, I'm using the word debit entry, and you're probably thinking, but hang on. Earlier on, Mahesh mentioned that credit is for purchase. So now, where does the debit fall in? Let's now look at it from the point of view of Stacy Traders. Okay, from their point of view, remember, they are selling on credit to exemplar stores. In other words, for Stacy, exemplar is a debtor. But for exemplar, Stacy is a creditor. So can you see where the debit comes in, guys? So remember, for the debtor, obviously the debit represents your purchases, but in terms of the creditor itself, the credit represents purchases. Okay, in terms of payments, in the books of exemplar stores, a debit represents a payment. Okay, let's just write pay. And in the books of Stacy Traders, a credit represents a payment. So it's obviously opposite in terms of this relationship that they have. Okay, so if we examine, let's start with our debit entries. So according to our creditors ledger, we have paid Stacy 4,350. Now let's look at Stacy's statement, whether she has that same entry as well. So on the credit side, she also acknowledges receiving payment of 4,350. In other words, it is absolutely correct. Let's now examine our credit entries. So we've only got invoices, guys. So that obviously represents purchases. So we purchased for 11,000, and according to Stacy's statement, we've purchased for 11,000, so that's absolutely fine. Then we've got 8,560 appearing on the statement as well. Then we've got 11,200 also appearing on the statement, and then 9,800 also on that statement. So in this particular example, there's no need for a recon. But remember, when these balances are different, then we need to now compare and we need to complete a reconciliation. Okay. Indy, I don't know whether we should take a small break and then carry on, or should I continue?
Let's take a little break, and before we take a little break, I can ask you a little question.
Okay, go on.
Okay, this is from Hector. Here is a question. Is it good policy to issue cash checks? I want to know, because two other mindsets actually have answered back, and I want to know, see if they're right.
Okay, right, guys, remember, cash checks. When do you issue a cash check? When you obviously want to obtain cash from the bank itself. So for example, for cash float, in other words, change for your tills, you're going to issue a cash check. So you get cash, you put the money into your tills itself. For petty cash, for wages, when you have to pay wages in cash. But a cash check, there's always a risk.
That's
and
exactly,
the risk is...
that's what I was waiting for.
The risk is that on that check leaf itself, you've written pay cash. So if you lose the check and someone finds the check, they can then go to the bank and cash that check.
Okay, guys, Mohammed actually said, no, it's unsafe to do that at Hector. So now,
well done, Mohammed.
There you go, Mohammed. Well done on that, Hector. Now you know. And we'll see you right after this break.
Okay.
Hi guys, and welcome back. I hope that you have enjoyed your little break. You've gotten yourself a cup of tea, coffee, had a little bit of jump around, because that's what I do to get some energy. Okay, grade 12s, what you need to do is, I know, okay, this is the last time I'm telling you. Last time, www.learnextra.co.za. /live for all of your schedules and for all of your notes. If you have a look on our Facebook page, we've got something really, really fun happening for the month of February. It's the month of love. It's showing how much you care. And what we want to do is random acts of kindness. We want you to pay it forward. Have a look in our events. We've made it easier for you. We've given it a space. Go to our random acts of kindness events on our Facebook page. And what you do there is you post pictures of you doing anything. Just show how much you care and how much you love, whether it's helping a little kid or helping your teacher carry her books from her car. It can be anything. And guys, I promise you now that there are going to be amazing prizes, which we will be announcing on Monday. But that's not going to stop you from posting those pictures anywhere. So get those pictures posting. I will repost onto the page. And let me not take any more of Mahesh's time. Mahesh, take it away.
Okay, right, thanks, Indy. Guys, we're now ready to move on to our first example on a creditor's recon. In other words, where the creditor's ledger balance is going to be different from the statement. So let's now look at this exercise. Example 1, Poodle Pet Shop. Poodle's Pet Shop received an account statement, statement number 114, dated 28th May 2009 from Ray B's Vets. So we've got Poodle's Pet Shop, so that is the business, and then we've got the creditor, who is Ray B's Vets. So let's just quickly write this down, because I know, guys, sometimes the names can be confusing in a test or an exam. So Poodle's Pet Shop is the business. Okay, in other words, we are the accountants for Poodle Pet Shop. And then we've got our creditor, Ray B. Vets. So I'm just going to put a C there. That's our creditor. Let's read on. According to an agreement with Ray B's Vets, Poodle's Pet Shop receives a 20% trade discount. In other words, remember, guys, this is normal business practice. If, for example, you want to improve your sales, you often offer incentives like a trade discount on all invoices, and additional 5% cash discount. So a cash discount if payment is made within 30 days of the account date. Statement 114. So remember, guys, the statement is your external record. It's coming from the creditor itself. Shows a debit balance of 27,888 Rand. So according to this statement that comes from the creditor, we are owing 27,888 Rand. Guys, when I say we, remember, I'm talking about the business. We are the accountants for Poodle Pet Shop. The accounting officer compared the statement with Ray B. Vet's account in the creditor's ledger, so the accountant, which is us. We then compared the statement that we received to our records, to the creditor's ledger, which showed a credit balance of 10,712. So there's obviously a discrepancy. The amounts are different. And then found the following differences. Okay. Right, guys, I'm not going to look at the differences immediately. Let's just go to the answer sheet first. Okay, there we go. Let's just extend that page there. So let's look at what is required, and then we go to the differences. We have to calculate the correct amount due to Ray B. Vets on the 31st of May 2009. In other words, we now need to reconcile the creditor's ledger. Remember, this is our internal document. This is what we have prepared, which is showing a balance of 10,712 Rand. We've got to now compare the internal document to the statement that was received, the external document, the statement that was received from the creditor, which is showing a balance of 27,888. The comparison, guys, is already done, and they're now giving us a list of differences that they've found. So let's now tackle, or let's go straight to those differences that was discovered. Okay, the very first difference Invoice 189, so the word invoice represents a purchase, was correctly recorded in the creditors ledger, so correctly recorded in the creditors ledger as 11,200. Statement 114 reflects the invoice amount as 14,000. So immediately there's the first error. According to our creditors ledger, we made a purchase and the purchase amount was 11,200, but according to the statement that has arrived, this amount is 14,000. The trade discount, so there's the mistake. The trade discount was not taken into account. Okay, now remember guys, right at the top we read, right at the beginning of the question, that they receive a 20% trade discount. So there's the difference. So let's now look at that 20% trade discount. There's two ways of looking at it. Let's get our calculators out first, guys. So we've got an amount of, okay, let's just shift that. Right, so we've got an amount on the statement which is 11,200. Let's just clear that, guys. Of 14,000 is what's on the statement, but according to the creditors ledger, it's 11,200, so minus 11,200. So the statement obviously left out the discount of 2,800. Now let's just quickly check whether we're actually correct. The purchase price, guys, was 14,000, and we should get a discount of 20%, so times 20%, and there we go. So there's that 2,800 that was omitted. So let's now enter this 2,800. Remember, guys, the 2,800 is the mistake made by or on the statement itself. Now, if you're receiving a discount, what happens to the purchase price that you should pay? Correct, it should decrease. So we're now going to decrease, let's get a pen out there, we're going to decrease in brackets, represents we're going to subtract 2,800. Okay. Sure, Indy, it's been a while because I've forgotten how to write.
It's okay.
Yeah,
I think you're doing great.
Right. Okay.
Yeah.
Right, guys, that was the first error. Let's now look at the next error. Okay, so our next error, we've got, let's just put, yeah, there we go. A credit note. Okay, immediately, guys, credit note. Alarm bell should start ringing. Credit note means that we have, and I'm not going to test Indy, a credit note means that we have returned items. So a credit note 73 for 320 Rand was correctly entered in the creditors ledger. So we correctly entered this in the creditors ledger, but it is shown as an invoice on the statement 114. Okay, now guys, very important, understand the error that has taken place. We have returned items with a value of 320 Rand. So just picture, for example, you now taking an item and you are returning the item. Instead of them obviously reducing your balance by 320 Rand, which should be done, they now mistakenly took it as a purchase and they increased your balance by 320 Rand. Now imagine, you don't even have the goods, but now they're actually charging you for those goods as well. So there's the actual error that has taken place. How are we going to correct this error? Let's go to our answer sheet. So remember, guys, it's not an error made by us. It is an error that is coming from the outside. So we are now going to tell them, hang on, guys, you have to now fix this error. So we're going to take away 320, but at the same time, by us removing 320 Rand, all we're doing is fixing the mistake itself. We're not recording the credit note. So we're going to obviously now double this subtraction. So we're going to subtract a further 320 Rand. Okay. Right, let's move on now, guys. Indy, do we have any questions so far?
Let me have a look on this here page. You know what, Mahesh? I'm going to say to the mindsetters, guys, post all of your questions onto the page. Make sure that they relate to what we're talking over. And when we have our next break, we'll go over and make sure that we find the best questions so we can push them out very fast.
Okay, brilliant. Right, next error. We've got Ray B's vet's account in the creditors ledger was added up incorrectly. It's undercast by 7,200 Rand. So this is now, guys, a mistake on our part. In other words, we've made a mistake in the creditors ledger where we added incorrectly, and it happens. You know it happens. You've made that mistake as well. So we've added incorrectly, and the account is undercast, or understated by 7,200. So remember, guys, from bank recon, if something is understated or undercast, you correct the error by adding on that amount, in this case to our creditors ledger. So let's go now to the creditors ledger, and we're now going to add 7,200. Okay, let's just quickly go up and make sure, 7,200. Right, guys, next error, invoice 194 for 6,280 Rand. So we've got an invoice, 6,280 Rand, has not yet been recorded in your creditor's journal because the goods are in transit. In other words, it's appearing in the statement because, remember, your creditor has already sent the goods, but the goods still in transit, it hasn't arrived to your shop itself. So we now need to include this entry. It's a purchase. The goods are, yes, on its way, but we now going to include this entry in our creditors ledger total. So 6,280 is now going to be added on. 6,280 will be added on to our creditors ledger. Right, guys, almost done with this question. The final error, we've got invoice 208 included 8 items that were on special and invoiced for the gross price of 160 Rand per item. The trade discount was not taken into account on these items. So again, the trade discount being omitted, being left out, and obviously it is an error on the part of the creditor itself. So let's now get the calculator out again and let's do a calculation. So we've got, there we go, so we've got 8 items, so 8 times 160. Let's just move that a bit so we make sure that we're getting the correct amount. So it's 8 times 160, get the calculator back there. Okay, and then we should get a discount of 20%. So our discount, 256 Rand, that was omitted, that was left out on the statement itself. So let's now enter that, 256 Rand that was left out. And remember, guys, a discount, obviously, what was that amount? Let's go back there. It was 256 Rand, so 256. Okay, right. Time to check whether we have still made an error or whether this is now going to reconcile. In other words, the two totals are going to reconcile. So let's start by adding. Okay, let's start with our statement. And again, let's get the calculator out, guys. Okay, let's just clear that there. So we started off a total of 27,888. Okay, on the statement. Then we now need to subtract 2,800. Okay, we then need to subtract 320. Okay, and then another 320. And then finally, we've got 256 to give us 24,192. So let's now fill that amount in. 24,192. I'm just going to extend the page a bit, guys. Where we go? Where's that? Oh, there it is. Okay. All right, so let's now look at our creditors ledger. Okay. And again, let's just move this a bit. Now I'm going to come on this side for a little while. So we've got 10,712, and we're now adding 7,200, and then we are adding 6,280 to give us 24,192. So let's just write that in. Okay, so we're getting 24,192. Okay, guys, what do you notice? Okay, what have we just done? We have reconciled our records to the statement that we received. Okay, right, brilliant. First exercise done, Indy.
Okay.
Can we take any questions? Do we have questions?
We do have a few questions. Let's just have a look.
Okay.
I'm waiting. Okay, so what I'm going to do is, because we've actually got quite a few, so thank you so
take a
much,
break,
guys,
okay?
for posting them on the page. Let's take a break, and when we get back, we'll be answering them. See you now.
Okay.
Hi guys, and welcome back to Grade 12 Accounting. You know what Mindset is? You guys asked for this, and now we have given you the accounting slot. So you've got an hour every Thursday to come and learn more, learn extra, and ask lots of questions. So now, I see KB has said on the page, hey Indy, will we get notes for this lesson? Because I'm basically not holding a pen because I don't want to miss out, which is fantastic. I'm going to irritate you guys again. www.learnextra.co.za/live. Guys, that is the link you go to get all of your show notes. You'll see. So these show notes are up, the next show notes are up, and also in 3 days' time we will upload today's show onto that schedule. It's the only link, it's the link that will lead you to where you need to go. So please, KB, go and visit there. We have quite a few questions.
Okay.
Are we ready for them?
Bring them on.
Okay. So now there's a few questions, but it's actually pretty much one question.
Okay.
So let me get to it now. Facebook, don't fail me now. It only does it because it knows that I want to ask a question. Fayaz has said, why did you double the 320? And I think who else said that? Touches, I don't understand why we subtracted the 320 twice. Very confused. Please help. And there's been a few of them. Mahesh, any help?
Right, guys, let's look at the 320 one more time. Now, remember, you have returned goods for 320 Rand. Now, let's go one step back. Let's look at when you bought the goods. And I'm looking at, obviously, from what was the name of our creditor? It was some crazy name. Where is that? From Ray B. Vet. So let's look at it from Ray B. Vet's point of view. Let's just call it Ray to make it simple. So they obviously sold goods to you for 320. Okay? Now they would record it as 320. You then get the goods, go home, and you decide, nah, I don't want these goods, take it back. So you now send it back to Ray. You don't want the goods. So remember, they obviously debited your account. They added on 320. Now, once you send the goods back, they should credit your account with 320. Hence, it's called a credit note. They should credit your account with 320. But then you get the accountant who has probably had a late night, partying and whatever, and instead of crediting the account with 320, he goes and he adds on 320. So now, look at what he's done, guys. He's now making it seem as though you owe 640 when, for this actual purchase, you owe zilch, absolutely nothing. So he's now added on 320. Now, how are we going to fix this, guys? Remember, a recon, you are fixing errors. So you need to now credit, or they need to credit your account with 320. But if they do that, it obviously gets rid of one 320 only. Okay, so we've got to double the amount. In other words, subtract a further 320, and by doing that, then we're going to end up with 0 in terms of this purchase. Okay, I hope that answered your question, guys.
I hope so.
I
and
hope
think,
so.
And we've got 15 minutes left. I don't know
Okay.
if you want to answer one more question, or should we go over the set work that we've done?
Okay, we haven't touched on debtors as yet.
you think
What
it's
is the
important?
question? Is it a quick one?
Okay, it's
Well,
whew,
questions are important,
gosh.
so
Okay, it's from Mohammed. Let's hope it is a quick one.
Mm-hmm.
He says, I want to know how we consider the post-dated check issued by the business in creditors' reconciliation.
a post-dated check issued by the business in creditors' reconciliation. Okay, Mohammed, post-dated checks issued by the business itself, that obviously you deal with that in your bank statement where you record it as an outstanding check. In terms of the financial statements, I remember Ashraf going through this last week. In the financial statements, you've got to actually reverse the entry. But as far as your creditor's statement is concerned, you don't actually deal with post-dated checks that were issued itself. I just hope I'm correct there, guys. Sure, that's a tough one.
It's a
Yeah, I
toughie.
just hope I am correct.
It's a
Okay.
toughie. So what I think
But-
we should do is we should carry on with the
Okay.
lesson. Mm-hmm.
Okay, right, let's now move on, guys. So we've now spoken about creditors recon. Let's now talk about your debtors recon. Now, for your debtors, guys, remember, your transactions, very similar to creditors, but the only difference is you are now selling on credit. So you've got debtors who are owing you money. Let's go through the transactions, and what I'm going to do is I'm going to skip reading, and let's go straight to the journals itself. So remember, your DJ for recording credit sales. See, accounting's quite cool in the DJ, and
It's
we have
awesome.
CJ. Okay, then you have the DAJ for recording sales that were returned. Okay, so DJ, guys, I'm just going to put a plus sign here. Obviously, when you sell on credit, your debtor owes you more money. DAJ, when they return goods, that balance is going to go down, decrease. Then we've got CRJ. CRJ is for payments that were received from your debtors. Then PCJ, it was for cash payments made for debtors. Okay, so remember, guys, PCJ, we're going back to grade 9, again grade 10. PCJ, when you, for example, pay for postage on behalf of a debtor. Then we've got CPJ. This is for recording your RD checks. And then your general journal, it is for any sundry transactions relating to debtors. So for example, your debtors do not pay their accounts on time, so you want to charge them interest. This goes into the general journal. So very quickly, CPJ, RD checks, remember, the balance is going to increase. General journal, if it's interest, the balance is going to increase as well. Right, now just as we had a creditor's ledger, individual accounts, let's read, individual accounts for each debtor is kept in the enterprise's debtor's ledger. So for example, we sell to Peter, we've got a record of whatever we sold to Peter, whatever payment we've received from Peter in his own account in the debtor's ledger. This individual account is a summary of all the transactions between the enterprise and the debtor, and it shows the amount due by the debtor itself. In other words, if I look at Peter's account in the debtor's ledger, I obviously know that at the end of the month, Peter is owing me, let's say, 1,000 rand. Right, so let's look at what is a recon, a debtor's recon. A debtor's reconciliation is usually a comparison of the control account. Okay, what control are we talking about? We're talking about your debtor's control. So your debtor's control account, which is prepared by you, the accountant, to the debtor's list. So for example, the debtors control account in total, my debtors are owing me 5,000 Rand. And then I go to my list and I examine each account in the debtors ledger, and I find that Peter is owing me 1,000, Impo is owing me, let's say, 500. Then I've got Jay that is owing me another 3,500. And then when I add up, I need to end up with the same total of 5,000 Rand. Obviously, if the totals do not correspond, they're not the same, you then do a recon between your debtors list, so a recon between the list and the control account itself. Okay. All right, guys, let's just move on to something.
Mahesh, Tata wants to know, would this probably be an exam question?
Yes, Tato.
Very much
It
so.
can be an
That's-
exam.
yeah.
I know, guys, it's obviously very similar to bank recon. You're going to find, especially when you look at past papers, which you should be looking at, especially in grade 12, look at your past papers, and you would see that the debtors recon, creditors recon, in fact, last year, Indy, we had a creditors recon. It was either in prelims, no, it was in prelims. In prelims, we had a creditors recon. So the exercise or the example that I did earlier on, very similar to that in last year's prelim.
So I hope that they were all watching, they're all
Yeah.
taking notes, right?
Okay.
Guys.
Right. Can we carry on?
Yes, carry on, sorry.
That's fine. Right. Guys, another very important concept that we need to look at, and we don't have much time, but let's just touch on this and let's see how far we get to. Your debtor's age analysis. Now, what do we mean by an age analysis? Now, the word age obviously tells you how old. When you think of the word age, you think of how old is someone. Age analysis for debtors, how old is this account itself? In other words, how long has this account been outstanding? So let's read the debtors age analysis report, or debtors age analysis, enables the credit division. And when we say credit division, guys, we're talking about your credit clerk or your accountant, to analyze transactions with debtors according to specific criteria and to determine how payments and collections are being made. This could be a useful tool to manage the business's outstanding debts. In other words, it is obviously a report that is prepared to show you exactly how long a debt has been outstanding. And if we have time, we'll quickly look at an example of a debtor's age analysis, and to see which debts or which debtors are not performing according to their credit agreement. In other words, the credit agreement tells you that I'm giving you, for example, 30 days to settle your account. The age analysis will show you whether that account was actually settled in 30 days or not. It allows the business to analyze the outstanding amounts the debtors owe the business in different periods, such as current. Current is usually less than 30 days. Then we have 60 days, 90, and then more than 90 days. Okay, do you think we have maybe a minute to quickly look at what a debtor's age analysis looks like?
Let's do it. We
Let's
totally
do.
do.
Okay,
Let's do it.
Let's see if we can find one quickly. I know it was towards the end of...
It's there, it's there.
yeah, it's there, it's there.
It's there.
Okay, guys. Right, there we go. There's an example of a debtor's age analysis. From this example, there's the names of my debtors. Okay, so in this case, we've got 5 debtors. Then credit limit, in other words, the limit that they are not allowed to exceed. So there's their credit limit. Amount due represents the total what they are owing. So for example, the very first debtor, he is owing 2,416. And then we've got how this amount is actually made up. So current, which is less than 30 days, he's owing 1,416. More than 30 days, 1,060 days, absolutely nothing. 90 days, absolutely nothing. Over 90 days, absolutely nothing. Okay, let's look at another debtor very quickly. We've got Colt. He's owing a total of 1,335. Again, that is the current. More than 30 days, 850, 60 days outstanding 20, 90 days 217. Okay, so that was your debtor's age analysis, and we couldn't really look at the questions, but at least the kids got an opportunity to look at a debtor's age analysis.
And what they can do is that they've got the show notes, which they
And
can
they can-
download
yeah.
and work through. And if you don't understand something, guys, you can email us on helpdesk@learnextra.co.za. You can post the question on our wall, www.facebook.com/learnextralive. You can also tweet us. Sorry, it's facebook.com/learnextra. You can also tweet us @learnextra. There are so many ways to get hold of us. Just post them on the page. If we don't answer them, another mind setter will. This community is for all of us. It's team mindset. Guys, don't you leave. Business studies is on next. It's going to be awesome. Thursdays have changed drastically, but it's so much fun. We get to learn more. We get to learn extra. We hope that you had a fantastic, fantastic show and enjoyed it as much as I did. These are real learning
Yeah,
skills.
it really is.
For future entrepreneurs, these are good things to know. Everyone should be watching the accounting session. Thank you so much, Mahesh. Thank you,
Pleasure.
Mindsetters, and I hope that you enjoyed the show. And we'll see you same time, same place next week. Bye.